Hi, I'm Nan Gibson. I'm Executive Director of the JP Morgan Chase Policy Center. I'd like to thank you for joining us for this important conversation. Our session today will focus on promoting economic equity in later life through innovative solutions and programs. Given trends in longevity, some of us may live 100 years or longer. I, for one, am well on my way there. Living for a century or more will impact how we work, our health, and how we finance our lives over such a long time horizon. Future generations of retirees are currently experiencing higher rates of economic insecurity. The growing gender, racial, and ethnic inequities experienced earlier in life are coming into stark relief as we see financial outcomes in later life growing increasingly fragile. We are fortunate to be joined today by inspiring leaders and leading voices on developing practical solutions to plan for our longevity and solutions that can potentially be replicated and scaled in our communities across the nation. We will hear about the trends in economic security as we age, the tools, including digital platforms, to improve our financial health, and resources for combating elder financial abuse and exploitation. We are delighted to be joined today by Dr. Lauren Popham, who is Associate Director of Research and Evaluation at the National Council on Aging. Brandy Bauer is Associate Director for NCO's Center for Benefits Access. Genevieve Waterman is Associate Director for Digital Economic Security at NCOA. And Sam Quinuen, a Senior Director for Bank Community Engagement at the American Bankers Association. So with that, I will turn to Dr. Lauren Popham.
Thank you so much, Nan. So I'm going to be talking about racial and ethnic wealth gaps throughout the lifespan. I'm going to present some research and analysis we did with my colleagues, Dr. Susan Silberman at the National Council on Aging, as well as Dr. Mark Cohen and Dr. Jane Tavares at the Leading Age LTSS Center at UMass Boston. So we'll go ahead and get started. So wealth rises for all families as across their lifespans, but there are substantial and significant wealth gaps that exist between white and non-white families that continue into older age. So this table is from an analysis by the Federal Reserve Board of 2019 Survey of Consumer Finances, which this displays the median wealth by age group and by race and ethnicity. So you can definitely see those disparities there. So like I said, I'm going to share some data from a research project we did. So back in April 2020, we were wondering how this was early on in the pandemic, and we were wondering how an economic downturn from the pandemic would impact older adults' finances. So to do this, we looked at the most recent economic downturn at that time, which was the Great Recession, to see how older adults' finances would fare during the pandemic. And we know that disparities exist, as I just showed you in wealth. And we wanted to see whether older adults of color experienced more significant declines in financial well-being during the most recent economic downturn, and whether that would have implications for the current economy. So to look at this question, we examined data from the nationally representative longitudinal health and retirement study. We looked at data from 2006 to 2010, which is the time period before and after the Great Recession. Our sample included adults age 60 and older, and we looked at, we had enough sample to look at non-Hispanic Black, Hispanic, and non-Hispanic white older adults. And we looked at changes between 2006 and 2010 in a number of different financial measures, including looking at poverty rates and things such as the total value of financial assets, which is non-housing assets, and the net value of total wealth, which is the sum of housing and financial assets minus debts. So I'll just quickly go over some of those key findings. So this chart shows you poverty rates by race and ethnicity, both before and after the Great Recession. And you can see that after the 2008 Great Recession, that poverty rates increased for all race and ethnicity groups of older adults. But it's pretty clear that poverty rates are substantially higher for older adults of color than they are for white older adults. And Although that gap narrows slightly between race and ethnicity groups between 2006 and 2010, non-Hispanic Black and Hispanic older adults were 4 times as likely to be in poverty than non-Hispanic whites. So we also looked at changes in total net wealth by quintile and by race ethnicity. And by quintile, what I mean is that we segmented the population into quintiles of total net wealth. So again, this is assets minus debts. And you can see that, so for instance, quintile 1 is that's the bottom 20% of older adults based on total net wealth. So these are the people with the least resources. And you can see that the Great Recession had the most significant impact on having a financial losses for those in the bottom quintile, those with the least resources. And the blue bar represents non-Hispanic white, the green bars represent non-Hispanic Black, and the orange bars are Hispanic older adults. And you can see that although there were losses for everyone, and especially in quintile 1, the non-Hispanic Black and the Hispanic older adults had the greatest losses. So we did the same analysis looking at changes in net financial assets. So these are non-housing, these are retirement funds, cash and savings. And again, you see that there were the greatest decreases in the bottom quintile for those with the least resources. So the recession had the hardest, strike hardest on those with the least wealth. And again, non-Hispanic Black and Black older adults experienced the largest declines across a number of the different quintiles. But of course, you can see the sharpest declines for the bottom quintile. So those were just some of the, the most important findings in terms of race and ethnicity. But in conclusion, we see that there are these long-standing race and ethnicity disparities in wealth, and these can be exacerbated by economic downturns. So we know that all groups of older adults may experience significant decreases in total net wealth during a downturn, but it's the Hispanic and non-Hispanic Black older adults, as well as, those are just the groups we could look at because we had a large enough sample, but that can be true for other racial and ethnic minority older adults as well. But they experience the sharpest declines in net wealth. And I think this demonstrates the need for a strong social safety net and for policies that reduce financial disparities across racial and ethnic lines. So with that, I'm going to turn it over to my colleague, Brandy Bauer.
Thank you, Lauren. And I think Lauren sets up what I'm going to talk about very nicely, which is sort of the role of public benefits in economics, in broader economic security. And you may be sort of wondering, if you're coming from the banking or financial services world, what do public benefits or private benefits have to do with your work? As you can tell, I'm going to be talking about sort of the role they play in economic security for these very vulnerable populations, but also some of the research that we have done related to benefits access and messaging has more broad application to a variety of financial services and products. So what am I talking about when I'm talking about benefits? I'm really talking about those public and private programs that can be a significant source of income and additional resources for individuals who are in that lowest quintile that Lauren just spoke about. This includes things like SNAP or food stamps, Medicaid. On this chart, you'll see LIHEAP, which is an energy assistance program. There are Medicare subsidies to help people to pay for their Medicare costs and their prescriptions. There are a lot of other programs like veterans benefits, tax relief, supplemental security income. These are all kind of folded into the broad network of benefits. But under-enrollment in these programs remains a huge concern among older adults. Only 48% of those 60 and older who qualify for food stamps are enrolled, which means roughly 5 million older adults are missing out on that program, which pays out an average of about $104 a month. So they're leaving over $1,200 sort of on the table. We also know from research that my colleagues at NZUA have done that roughly 2 million Medicare beneficiaries are missing out on the subsidies that make Medicare affordable. And you can see from this chart, I just pulled out 4 of these key programs and the average values as estimated by the federal administering agencies. And they do have the opportunity to put thousands of dollars back into the wallets of very vulnerable populations. Whoops. One thing I wanted to really talk a little bit about is what prevents older adults from taking advantage of these services and programs. One of the things that we did at NCOA was to collaborate with a group called the Diverse Elders Coalition to understand what prevents older adults of color and LGBTQ older adults with limited income from participating in these programs. And we really looked at what we call two forms of stigma. One of them is external stigma, which is really a stigma that's associated with the way these programs are administered and the agencies that administer these programs, versus internal stigma, which is kind of what you would traditionally think of as stigma, that sense of kind of a moral failing if you have to participate in these programs, if you have to accept a handout. So when we ask these groups, why have you, what you are seemingly eligible for these benefits, why have you not participated? You can see that the forms of external stigma really rank a lot higher than that internal stigma. So there's a lot of concern about the application processes, the paperwork, having to engage with these agencies, not knowing where to begin to get assistance. And then you can see, only 38% of them really said, I don't want to get a government handout. So the willingness to receive this assistance is there, but these other perceived ideas of how difficult it is kind of impede a lot of activity. And another thing that we looked at was, whom do you trust? When you're seeking trusted information about financial services and making these decisions, whether it's to apply for benefits or something else, where do you go? And for the majority of diverse older adults, it was really, staying within the family. It was they trust their partner or their spouse or their adult child for advice first. They also trust traditional government institutions like Social Security and Medicare, as well as their health providers. But I think that issue about the family trust really goes to saying that we need to do a better job of working with, for example, adult caregivers of older adults to really communicate with them to really reach that population. So another thing that we discussed with these diverse older adults that we surveyed is, how can we talk about these issues with you without, turning you off? And one of the things that really resonated, not only with the diverse communities surveyed, but also with the general public, is just this notion that retirement income cannot keep pace with the rising cost of living. For many older adults, they're living on a fixed income, which is mostly made up of Social Security and perhaps a little bit of savings. But every year, the Social Security cost of living adjustment is very minimal. It's 1%. It's not keeping pace with the cost of inflation. But a lot of other themes that spoke to people were related to their sense of living in the community. So older adults want to remain independent. They do not want to be a burden on their family members. They do not want to have stress and worry about their finances. So the more that we can emphasize benefits are a way for them to achieve these goals of retaining their independence, of not being a burden, the better we can use them. And then finally, a theme that we have used a lot at NCOA is this notion of you've earned this. This isn't a personal failing that you have to receive assistance. You've worked hard all your life. You've paid into this system and these programs. And often the system is stacked against you. So it's just your opportunity to take advantage of them. So I wanted to just point out a few ways that you can potentially connect to these programs and people who are helping older adults with these programs, because chances are if you have older adults who are coming into your bank or your institution and they're struggling, you don't necessarily know where to go. One is in-person assistance. We know a lot of older adults are not as comfortable with technology or would prefer that sort of in-person touch. And we support a network of 80 benefits enrollment centers that are working across 40 states. and they help older adults to connect to a range of social and financial supports. We have a map of where they're located on our website, but one thing I want to point out is they are very, very keen to partner with banks and other institutions in their community, because a lot of times these seniors, they come into their door, they have debt, they're using like predatory lending, payday loans. And these group of folks at our BECs help to connect them to benefits, but they want to be able to send them to other reliable institutions for that additional financial assistance. So we certainly would welcome making those connections between you and that network. Another thing to know about is if you're working with any of your clients who have Medicare, there are these federally funded state health insurance assistance programs in every state that help people to apply for Medicare subsidies, that help people to look at their coverage and make sure they're not getting scammed. We really encourage people to just make that reference as well. And then finally, as a digital tool, NCOA offers online benefits checkup, a tool in both English and Spanish, which is a sort of serve yourself, a free and confidential screening where people can enter some basic financial information about their income and their assets, and it tells them what may be available to them. And you can use that as well. If you go to the resources tab, you can find out programs that are available in your area in terms of tax relief or employment assistance. If you want to make those referrals as well, this is open to anyone. And so with that, I'm going to turn it over to my colleague, Dr. Genevieve Waterman, who is going to talk about our equity promise.
Thank you, Brandy. Okay, so my colleagues Lauren and Brandy have been giving you very detailed information about the initiatives and programs that NCOA is doing, but I want to take a step back and kind of talk a little bit more about what NCOA as the organization is doing and what we're doing with our next phase of our digital products and tools. So at NCOA, we're really focused on this idea of, answering the question of why aging well matters. And it really is about addressing some of the systemic disparities that Lauren outlined in her data and Brandy talked about with some of the stigma behind benefits, but really to look at and really identify solutions to help those that have been faced with gender, race, or sexual orientation, zip code, income, all different types of disparities. We want to be able to address it because we know that a number of older adults are going to be aging between now and 2030, and that 80% of them are financially insecure or at risk of becoming financially insecure. We're also addressing, so we are focused on two different areas. One is economic security and the other is on healthy aging. And so we really want to be able to kind of take those two items, identify that as a holistic approach and address older adults' needs. We also have a new equity promise as well, and it's included in this slide if you want to take a look and click on the link, or I will put it in the question and answer section so that you all have it. I encourage you to read it. It basically outlines the importance of addressing these different types of disparities and what NCOA is planning to do based on our hybrid approach of utilizing the community-based network that Brandy had mentioned. She mentioned a portion of that. We also have a network of National Institute of Senior Centers as well. And then also with our digital tools and how we address older adults' needs on a virtual level. So the way that NCOA affects change, and I kind of alluded to this just a little bit earlier, is really looking at how change comes when everyone works together. So that means that you're empowering the individual, you're working through your community-based networks, and then you're pursuing different types of solutions to address market failures. And so through this approach, we are aiming to develop or reach our goal of 40 million older adults by 2030. And our focus is really on serving and providing resources and tools to women, individuals with incomes below the 300% of the federal poverty level, those that are living in rural communities, and individuals of color. So our next phase of what we are looking to do within NCOA is to expand and enhance our next generation of digital tools. So if you are well aware of NCOA, you might know of some of our digital tools, but if not, just to give you a kind of a background, we have had digital tools in the area for about 20 plus years. Our most well-known tool is Benefits Checkup. We also have My Medicare Matters, and then we previously had Economic Checkup. But we decided that we really need to think holistically about that individual and have everything on one single platform. And so that was the reason why we created Age Well Planner. And the main vision of that is to think of this as a digital planner. It helps guide you through everything that you need to know throughout your lifespan. So this is not just focused on something that, you turn 65 and here's everything you need to know. This is how do we get, how do we help you? How do we provide resources and tools so that way you can plan for retirement, address the needs that you may have, because we know not everyone ages the same way, and then help you get through your later years, however you choose to plan those and live those out. The main piece of Age Well Planner is that we aim to educate, inform, and activate. So we're providing unbiased education through our trusted resources. We have vetted partnerships, so that way we know that they're providing the right types of educational materials, and we're steering them towards the right resources and tools. We're not steering someone towards something like a payday loan. We want to be able to actually address the problem without putting that individual in a more vulnerable state. And the other key areas that we're providing proactive and reactive solutions. So we notice that seems to be a gap in the market where we're always providing some sort of reactive solution to the problem, and we really want to get ahead. So for example, if I'm someone that is chronically financially unstable, we want to be able to help them develop financial stability so that way they can then build assets over their lifespan. So Age Well Planner is in its minimal viable product, which means that it's brand new. We launched it in September and we did a redesign in March based on some user feedback. So the current topics that we have in Age Well Planner are finance, Medicare education, health, and wellness. We are planning to expand, so we are bringing over our benefits checkup, and that will be brought over next year. And then we are also developing different topic areas to really make it more holistic for the user. So we are looking to go into workforce development or employment opportunities, managing debt and credit concerns, addressing housing issues, or utilizing your house as your nest egg or your main source of assets, exploring financial exploitation and scams, understanding long-term care costs, addressing insurance needs, so determining whether or not the individual has adequate insurance coverage for the different types of areas of their life. For example, do you have homeowners insurance? And then finally, end of life planning, helping individuals to plan to utilize, make sure that their assets are utilized and transitioned off to the next generation in the right way. That's the most customized way for them. And then also think about, are they covered? Do they have all of their documents in place for end of life? So I'm going to briefly go through two key areas in Age Well Planner. The first being our finance section. And this was conceptualized with the thought of, we know that we work with a lot of low income older adults who haven't had access to a financial advisor throughout their life. So we really want to be able to think about what is the education, or what are the needs that they may need, or what's the information that they would receive from a financial advisor, and then put it online so that way they have access to it. So that's how we came to the finance section. And the user goes through a short assessment. They provide us with information. The one key area is that we focus on the employment status. So if you identify as being fully employed, you'll be able to answer sort of the lump sum amounts that you have. So for example, we're thinking of the accumulation phase. Whereas if you identified as being retired, then we're focusing on the deaccumulation phase. So for example, in this screenshot, this individual identified as being retired, and they're showing us their monthly income. So that way we can help them navigate how best to utilize their different types of income streams. And one key area that we really wanted to focus on was the benefits. So taking what we know, for example, Brandy talked to us about her work within the benefits piece. We know we're experts in the field of benefits. So how do we begin to change the narrative around how benefits are an integral part of your retirement income? So you'll see that there in the breakdown as well. And then eventually, as we expand this area, we hope to bring on new partners who are able to kind of provide tools or calculators to help older adults kind of navigate through their daily needs. So whether or not they face a financial crisis, how can we rearrange some of the money that you need so that way you're not going to experience a financial crisis down the road, or face a serious issue or lose your home. So that's kind of one of the key areas that we have within the finance section. Again, really focusing on this approach of utilizing and understanding their income sources. So whether or not you identify as a low, middle, and high income user. So for example, the differences would be if I'm a high income user and I say that I want to explore different types of annuity products, we would then connect you to the right trusted partner. For example, if I'm a low income user and I identify as having a financial concern that I don't have enough money to date, I'm unable to pay my bills, we would then connect you to determine whether or not you're eligible for benefits. Versus whether or not, if I'm a middle income user, we would identify whether or not you'd be a good candidate to talk about investments. And then the final area is our Medicare section. So this is taking our My Medicare Matters product and bringing it over. And we have it's basically identified as the individual take a short assessment, determine whether or not they're eligible for Medicare based on their age and their income, and then also their zip code. And so the reason why we ask for zip code is we want to be able to provide a cost estimator. So basically the screenshot that I'm showing here shows the individual's potential out-of-pocket healthcare costs based on a Medicare Advantage plan or a Medigap and Part D plan. And so basically you'll see here that shows the different types, the lowest, median, and highest cost plans. However, you will note that there is no information. For example, it doesn't show like an Aetna. It doesn't show the different exact types of plans because we are not a broker. We are simply providing the user with the information. And if they want to connect with a broker, we have partnered with Medicare Choice Group, and they are the ones to be able to get the individual to actually enrolling in the product. And with that, I will now turn it over to Sam.
Well, good morning, everyone. As Nan mentioned earlier, my name is Sam Quinuen, and I'm the Senior Director of Bank Community Engagement at the ABA Foundation. That's the American Bankers Association Foundation. For those of you who may not know, the ABA Foundation is the 501c3 nonprofit arm of the ABA, and we work with a network of bankers around the nation to really improve the well-being of customers and communities throughout the nation. We utilize a multi-pronged approach in working with banks to support older Americans of all different backgrounds. The first focuses on education to mitigate against elder financial abuse and exploitation and to help elders age well. Through our Safe Banking for Seniors program, we develop turnkey resources to help bankers lead presentations to educate elders and their families on how to protect their financial assets and identities. So essentially, we provide a lot of the materials while bankers deliver the presentations. The program includes an Older Americans Toolbox, which you can see on the screen, that walks bankers through starting a senior financial education program at your bank, planning senior financial education events, and then also communicating with your community about the work that you're doing. Bankers also have access to specific modules. This is the crux of the program, to share information about how to address elder fraud, and then also how to support financial caregiving. So these 6 modules that you can see on the screen talk about avoiding and identifying scams, preventing identity theft, choosing a financial caregiver, acting as a responsible financial caregiver, understanding powers of attorney, and then choosing an executor. It's a lot of comprehensive information that's discussed through the various materials for about 60-minute presentations, whether they are in person through non-COVID times or currently through a lot of virtual presentations. And we focus on a lot of comprehensive materials that discuss from things like lottery scams to romance and imposter scams. The materials discuss how to present on how identity thieves operate and how people can protect themselves. The materials also include some great information on the roles of financial caregivers, financial caregiving challenges, understanding some of the differences between durable and springing and general powers of attorney. And they also include some great resources on estates and differentiating between probate and non-probate assets. So it's quite a bit of information, but it really is developed in such a way to help bankers educate their communities on how to support financial caregiving and also how to prevent elder financial exploitation. Each of the 6 modules comes with a collection of materials that include a presentation guide, which really provides great information on how to essentially present this information to your communities. So even if you're a banker that might have started yesterday and then tomorrow you have to go and give a presentation, it gives you word for word information on how to present such information to your communities. There's the presentation slides, which serve as the primary conduit to share the presentation materials. We've got activity sheets that are really geared toward helping individuals in your audience really understand what do you do in different types of scenarios. So for example, there are situations on there that says if you get a call from someone claiming to be Social Security and indicating that your Social Security number has been compromised and ask you to confirm information, what do you do in those types of scenarios? There's resource sheets to help the audience identify exactly who to speak to and who to contact in different types of situations. Certainly there's handouts to provide that could be either downloadable or printed when you're doing in-person presentations to help reinforce different types of topics. And there's a variety of communication tools to help you educate and share the information with your communities about the various programs that you have developed. In addition to that, we have a partnership with the Federal Trade Commission where we focus on developing a number of tools, specifically educational materials around infographics that highlight issues or scams that disproportionately affect older Americans. These include romance scams or phishing scams or fake check scams, imposter scams, government imposter scams, and money bill scams that are all part of the package of Safe Banking for Seniors. In addition to the education side, the second area that we concentrate on is focusing on partnerships. So if you look on the left side of your screen, you can see our guide, which is the Protecting Seniors Guide, which is really all about cultivating relationships between banks, law enforcement, and adult protective services. Because at the ABA and the ABA Foundation, what we recognize is that when it comes to protecting older Americans, it cannot rest on one group or one discipline's shoulder. It really requires a multidisciplinary approach. So that guide is set up to really help cultivate and facilitate relationships and to encourage bankers to engage in this particular area. Thirdly, we engage in research. So if you look on the right side of your screen, you can see a document called our 2019 Older Americans Benchmarking Report. And this is a survey that we launch about every 2 years where we ask bankers directly, how are they engaging with their older American communities, their customers, their clients? How are they training staff to address elder financial exploitation? And how are they educating their communities on how to mitigate against these types of risks? In fact, this year, we're actually about to launch in this May, so very shortly, actually right now, we're in the process of doing all of this. And if you are interested and in the audience and you're not participating, please do not hesitate to reach out to me. I'll be able to facilitate a connection so you can engage directly and provide feedback on this great work. All of these resources are available completely for free through the support of a number of banks, including Ally, Bank of America, JP Morgan Chase, Wells Fargo, and Truist Bank. And we ensure that all banks around the nation have access to this just by registering for free at aba.com/seniors. Once again, that's aba.com/seniors. You just click the free registration button, go through the steps, and you'll be able to have access to all the materials. On the other side, we actually have a number of resources to help non-banker groups reach out and connect with bankers, and they're able to do so through our FinEd Link platform, in which consumer groups can actually request a free banker-led presentation by visiting aba.com/FinEdLink. Again, that's aba.com/FinEdLink. So with that, I'd just like to say thank you so much for having us here, and I'll turn it back to Nan.
Thanks, Sam, and thank you all for terrific presentations. There's a lot of really compelling data and important resources. And we have a few more minutes before we take questions from the audience. But while we're on you, Sam, I just wanted to ask a quick question. Maybe you could just talk a little bit about how safe banking for seniors is different from some of the other programs and resources that are available, like FDIC's Money Smart for older adults. Just talk a little bit about, how, the sort of where ABA is sort of, providing differentiated resources.
Sure, sure. So, a lot of the resources that we provide take a two-pronged approach. So we're doing the elder financial exploitation issues that are being addressed, and there's the education side about that. And then simultaneously, there's a significant amount of resources that are geared toward helping families prepare for the future. As we all know on the call, there's about 10,000 baby boomers turning 65 every day. And by 2034 or so, we'll have more older Americans we'll have more individuals who are older Americans than children for the first time in American history. So with all of this that's happening, there's a huge need to be able to appropriately support our older Americans. And there's going to be a huge need for financial caregiving. So through our Safe Banking for Seniors program, we're trying to help focus on both of these areas simultaneously. But the crux of this is really geared toward the banker audience. So these materials are specifically tailored and designed for bankers, understanding where bankers are coming from so that bankers can talk about different programs and help them develop it at their own specific bank. So we've got that framework, which I shared about with the Older Americans Toolbox, and then we have all of the different specific content, and there's a lot of different communications tools and resources that are available, but it's really all geared toward helping banks share this information. Other programs, whether it's FDIC or CFPB, it's really open to a lot of other groups and individuals to share, but our materials are tailored to banks to lead these presentations so that they can facilitate community connections and share this information.
That's terrific, Sam. Thank you. Genevieve, I wanted to turn to you for a minute to talk a little bit about the Age Well planner, because obviously financial health throughout our entire lives is incredibly helpful, but it becomes, there's an urgency about it, right, as among older adults. I'm wondering if you could talk a little bit about what kind of take-up rate you're seeing with those resources and some of the strategies that you may be using for increasing use of how to get more people to take advantage of the resources that you all have, the fabulous resources that you all have produced.
Sure, and that's a great question. So we have seen a large number of individuals come through since our launch, and I believe that the numbers between September and March was about 4,000. And just in the last month or two, we've actually doubled that. So we're at about 9,000. So we've seen that there is a large number of older adults that are seeking services from us. They're also reaching out to us through our Contact Us form, explaining that they're having trouble kind of navigating, navigating through retirement, but also kind of just financially navigating through the fact that they don't have enough money for the day-to-day. We're getting a lot of heartbreaking emails saying, I can't afford to eat, help me, I don't know what to do. And so what we are trying to do is, as we expand and bring on strategic partners, within each one, we develop a social media campaign. We're also utilizing our partners networks, so that way they can reach out to either their customers or their network, be able to say that we're developed this partnership. And we see that that's increasing a lot of the traffic to Age Well Planner.
That's fantastic. Brandy, I wanted to circle back to you as well. I was wondering, I was struck by the comment about the polling, and the stigma is not as big of an issue as just the sheer paperwork application process seems to be one of the biggest hurdles. And I'm wondering, if you all have thought about ways, and maybe even digital tools for helping to streamline that process somehow. I'm just wondering, given all this technology, how we can help folks get through the that process more easily.
Yeah, absolutely. So one of the things we've done sort of more on an advocacy side, because a lot of these programs are administered by state agencies that are using archaic systems and forms that are
Right.
many pages long. There are a number, however, of waivers at the government level for states to be able to do, a short 2-page application for seniors for a lot of these programs. So we really advocate states to take that up. At the same time, we're really trying to work on, with our benefits checkup tool to help guide people along as much as possible to provide them the information that they're going to need if they're going to apply. In even one state, we have the ability to pre-populate a form for a couple of these programs. So we do definitely recognize that there's an opportunity there to better streamline the process. The unfortunate thing is that a lot of these programs are administered differently in every single location. And so there isn't a universal application yet, though we are certainly strong advocates of that.
And then could you just spend, a couple of minutes talking about examples of how banks are working with your enrollment centers?
Yeah, I think
the best position to handle that, but if you could, that'd be
yeah,
great.
no, I think it's, a lot of the folks that come into our benefits enrollment centers, they coming in because they're in crisis. They have an immediate financial need. The benefits enrollment center obviously works to help them to connect to those programs that can help to pay for the basic necessities. But in some of them are unbanked or underbanked. So making that referral to particularly like credit unions, especially, but other banks as well, to help them to, start savings funds if they don't have them already, to help them avoid scams that Sam talked about. I mean, we see a lot of vulnerable older adults who are already limited income and then exposed to those scams. So really helping to make that connection to get them on the path to be able to at least have a creditable financial institution in their life, to help them deal with debt to avoid those scams.
Yeah, absolutely. And that those are all really great points. And then Lauren, I wonder, getting back to the root of a lot of these issues, I wonder if you could, you mentioned the economic safety net and the importance of strengthening that. But I'm also wondering if you all have some recommendations about, some of the more systemic changes that need to be, put in place, maybe policy recommendations in order to strengthen the financial health of individuals throughout their life, but most especially, in later life.
Yeah, I mean, it's a really complex question. I think
for
mostly
a short conversation, totally agree. But
yeah, I mean, I think where NCOA's public policy and advocacy team, a lot of their recommendations are some things that I think Brandy talked about with regard to, I mean, it's more reactive, right? It's not a proactive thing or getting at these, systemic racism and wealth inequality over lifespan and intergenerational wealth, that sort of thing. But a lot of the recommendations are around just getting people into benefits, like, as I presented in on my slides, that the poverty rate is so much higher for non-Hispanic, Black and Hispanic older adults. And so a lot of those people are eligible for benefits. And so I think streamlining the application process, or different changes around the application process and stuff is probably a really beneficial thing. So yeah, complex problem. I don't know if that answers your question, but those are some of the things that NCOA is thinking about.
I mean, I think these are very, very complex problems, obviously, and we look forward to hearing more about how we can work together to solve some of these issues, and whether it's equity or access to mainstream banking services and, working on financial health and wellness, or combating elder financial exploitation. So I think we are ready to turn to the audience questions. So we look forward to the Q&A now.
Okay, well, thank you all for joining us. I see that there are a couple of questions, so I'll go ahead and take one of the questions. The first one is from Karen, so thank you, Karen, for joining us today. And it's in regards to those of you who are currently NCOA partners or work with us across our different community partnerships or work with us along our digital tools. So if you are interested either in continuing your partnership at maybe at a different level, maybe enhancing it, or maybe you're new to learning about NCOA and what we do as an organization, I'm more than happy to reach out with you and talk to you directly, so that way I can kind of help guide you in what might be the best partnership for both you and your organization. I believe, so we just lost Nan for a minute, but I'll turn it over to Sam. Sam, I believe there's a question about bank accounts and caregivers that you would best answer.
Sure. Thanks so much, Genevieve. And thanks, Shania, for sending over the question. So the question specifically about, would the caregiver have to set up an account with a particular banking institution, or would it be available regardless if the individual has an account set up with the bank? So the information that I had shared for safe banking for seniors, all of that is completely available for individual consumer groups, I should say, to access through FinEdLink. You don't have to go through a particular bank. You don't have to go down to your bank down the street, for example, and then open up an account to necessarily access this information. What we've done is we've set up a web link that was FinEdLink that we just added into the comments a few moments ago, and that is www.aba.com/FinEdLink, which stands for Financial Education Link. Using that, you've got the ability as a consumer, or part of a consumer group, I should say, you can access these materials by making a request for a banker-led presentation. So in short, you don't have to set up an account with a bank or any specific bank to access these materials. It's more along the lines of going through the online platform to request this information on a banker-led presentation on any of the 6 modules that I shared. And then for bankers in the audience, they can access it through aba.com/seniors. Just go to the website, put in some information about who you are, register, and you'll be able to access all of that information.
Great, thank you, Sam. I'll turn it over to Nan. I believe you're back, Nan. And we're all out of questions from our attendees, so I'll turn it over to you. Oh, we just lost her. Okay. Well, in the meantime, if you have any questions, please feel free to pop that in the chat. I'm going to go ahead and ask a question to Lauren. I'm just pulling it up now, Lauren. So one of my questions for you is in regards to some of the data you presented earlier on. So tell us a couple of reasons as to why there's racial disparities in wealth.
Yeah, thank you for this question, Genevieve. This is a really important topic to help us understand why you do see these racial and ethnic disparities in wealth. And one of the main reasons is that people of color tend to have lower incomes over their lifespan. And of course, this makes it difficult to afford basic expenses. It also makes it a lot harder to save and invest in the stock market to build wealth. There's also the issue of wealth being passed down from generations. So whether that's inheritance or family financial support when purchasing, for big purchases like a home or those sorts of things, or paying for college, those are intergenerational wealth is more common in white families. Also, we know that home ownership is it's an important vehicle for accumulating wealth. And people of color own homes at lower rates, or they're delayed in home ownership, and then that means that they have less wealth accumulation over time. And also an important one is people of color often have less access to retirement plans for saving. So those are some of the reasons. It's not a comprehensive list, but that kind of gives you a sense of why we see these disparities.
Yeah, and that's definitely something that we've also thought about, just to kind of add to your point. So part of what we're doing with our new generation of digital tools, especially when it came to conceptualizing age-old planners, we took the data that Lauren is discussing, and then we also applied it to what we know from what we're seeing across the country. So the programs that Brandy was mentioning are benefit enrollment centers, and we also have SNAP grantees as well who are focused on getting older adults enrolled in SNAP benefits. So we took a lot of that information and really brought it together to really think more about what's beneficial for all of our users and how do we help those that are struggling. And we saw with the COVID-19 pandemic that can happen to anyone. Anyone could be on the next food line, you know, asking for a basket of food or obtaining food stamps. So it's something that we need to be a little bit more cognizant of. That's something that we're approaching at NCOA as evidenced by our equity promise. And something that we will be thinking continuously about: what are the long-term effects of COVID-19, not only on the current generation of older adults, but thinking about future generations of retirees and what they're going through across their lifespan and how that affects them later in life. So I will, since we have about a couple more minutes left, I will turn it over to Sam. Sam, if you wanted just to kind of clarify just a little bit more, basically about the materials that you shared, basically whether or not these are materials for your members, whether it's free to access them, and how do banks participate in your Safe Banking for Seniors program?
Sure. So in short, everything is free. And it's through the sponsorship of a number of major banks, including JP Morgan Chase, Ally Bank, Truist, Wells Fargo, US Bank. There's a number of banks that have been supporting this, especially also Bank of America. And so through a lot of that sponsorship, what we've done is we've enabled a situation where everyone can really access this completely for free. And because it's through the ABA Foundation, we ensure that this is available for banks around the nation, whether or not they are members of the American Bankers Association. So even if there are any bankers on the call that are not part of ABA, they can certainly access this readily and available right at aba.com/seniors. And then similarly, it is completely free for consumer groups, whether there are senior centers or sheriff's departments or faith-based ministries. There's a lot of different types of groups that have already accessed this through our FinEdLink website, and it's certainly open to additional groups completely for free.
And just to emphasize, Sam and I have been partners for a couple of years now. It seems like it was just yesterday that we just met. And we really are highlighting the fact that the partnership has really been focused on how do we help older adults the best way possible. So utilizing all of the expertise that Sam brings from the American Bankers Association and utilizing our NCOA's expertise in serving older adults and their banking needs. And that's another example of a potential partnership where if you are a bank or a credit union, you know, we're always interested in expanding the partnership that we have with Sam. And it's been very fruitful so far. So thank you, Sam, for joining us. I know you're inundated with all these NCOA folks on our panel, but we enjoy having you here.
It's my pleasure. Thank you.
So we don't have any other questions in the chat. And at this point, I am opening it up for any last minute questions. If not, we will end this early so you can all head out and get some lunch. All right. Well, thank you so much, and enjoy the rest of the conference and the rest of the age-friendly banking convening. I believe there's a second one coming up later this afternoon, so please attend that conference as well. Thank you.